Welcome to Earnings Recap. Today we're covering Ford Motor Company's earnings report and call.
Right, and Ford had some interesting things to say.
Yeah, before we even get to the financials, Jim Farley mentioned the Ford Ranger won North America Truck of the Year again. That's, 5 times in a row?
5 times, yeah. Quite a streak for the Ranger. Shows some enduring strength there.
Definitely. So for this deep dive, we're basically going to unpack Ford's latest earnings report and what came out of their conference call. We'll try to break it down, keep it straightforward so you get the key points quickly.
Okay, sounds good. So let's unpack this first quarter for 2025. It's a bit of a mixed bag, actually.
How so? What are the headline numbers?
Well, revenue came in at $40.7 billion. That's actually down 5% compared to this time last year.
Okay, down 5%. Is that a sign of trouble? Weaker demand, maybe?
Not necessarily, or at least that's not the story Ford is telling. They specifically said this dip was mostly because of planned plant shutdowns.
Planned shutdowns. Why would they plan to shut down?
Exactly. It wasn't like an unexpected problem. Ford deliberately paused production in certain places, partly to retool for new models coming out and partly to, rebalance their inventory levels, get things where they want them.
Ah, okay. So it's like a strategic pause, hitting revenue now for a potential benefit later.
That seems to be the idea. Fewer cars shipped this quarter means less revenue now, but it's an investment in getting those new products ready.
Got it. What about profit then? How did that look?
That took a bigger hit. Net income fell quite a bit, down to $471 million. Last year, it was $1.3 billion.
Wow. Yeah, that's a significant drop.
It is. And similarly, adjusted EBIT, that figure that tries to show underlying operating performance by stripping out interest, taxes, special items that dropped too, down to $1.0 billion from $2.8 billion last year.
Okay, so profits are definitely down, even with that context of planned shutdowns. That's still quite a squeeze on the core business, isn't it?
Yeah.
Balancing the old with the new.
Absolutely. It really highlights that challenge for legacy automakers, funding the EV transition while keeping the traditional engine business profitable. There's likely pressure there to really optimize those gas and hybrid vehicles.
Right. So revenue down, profit down due to these strategic moves. What about cash? How's our cash flow holding up?
See, that's where it gets a bit more, nuanced. Operating cash flow actually looked pretty good. It jumped up to $3.7 billion from $1.4 billion.
Okay, that's positive.
Yes. But then you look at adjusted free cash flow, and there they actually used $1.5 billion. Last year they used about $0.5 billion. So more cash went out the door on that adjusted basis.
Use $1.5 billion. So spending more than they're bringing in on that measure.
Right. But again, you have to connect it back. Those planned shutdowns cost money, right? And they're still making big investments for the future. So it looks like they're putting capital to work strategically right now, and that's hitting the short-term free cash flow number.
It really sounds like Q1 was about setting the stage, maybe taking some short-term pain for longer-term goals. Were there any, green shoots or positive signs mentioned within the results themselves?
Yeah, definitely. Ford made a point of saying they saw improvements in both costs and quality. Those things actually helped the results this quarter.
Okay. Costs and quality improvements. That's good to hear.
It is. It suggests, their internal pushes for efficiency and better vehicles are starting to pay off. But of course, those positives were kind of drowned out in the headline numbers by the lower sales volumes from the shutdowns and the inventory stuff.
And overall, financially, how are they looking? Do they seem solid enough to handle this transition period?
Their balance sheet looks quite strong, actually. They've got a hefty $27 billion in cash just sitting there.
$27 million, okay.
And total liquidity, so cash plus available credit, is around $45 billion. Plus, they just renewed their big corporate credit lines in April, $18 billion worth for another year.
Renewing credit lines is usually a good sign of stability, right? Shows banks are still confident.
Exactly. It underlines that they have financial stability and access to serious capital if needed.
Okay, good foundation then. Let's maybe drill down into the segments. Starting with Ford Blue, that's the traditional gas and hybrid side. How did they do specifically?
Ford Blue definitely felt those shutdowns.
Yeah.
Wholesale units, so cars shipped to dealers, were down 6% to 588,000.
Okay.
Revenue for Blue was also down 3%, landing at $21.0 billion. But the really big story for Ford Blue was EBIT, the operating profit.
What happened then?
It plummeted down to just $96 million.
$96 million. From what?
From $901 million in the same quarter last year.
Wow. That's a massive drop. What caused that?
Primarily those lower volumes we talked about due to the shutdowns, and they also mentioned some unfavorable foreign exchange rates hitting them. So yeah, the planned slowdown really impacted the traditional side's profitability this quarter.
That is steep. Even with those explanations, that's a big hit to their core profit engine. Any bright spots at all within Ford Blue?
Well, Ford did make sure to point out that their big names, the F-Series trucks, the Bronco SUV, they're still leading their segments. Market share remains strong for those icons.
Okay, so the flagships are still popular.
Right. It suggests that even though overall numbers were down this quarter, the fundamental appeal of those key gas and hybrid models is still there.
All right. Now let's pivot to Model E, the electric vehicle and software division. This is where a lot of the future story is, right? How did Q1 look for them?
A very, very different picture for Model E. Wholesale units surged, up 213%.
213%.
Yep. To 31,000 vehicles. And revenue, that jumped an incredible 967% to $1.2 billion.
Whoa, hold on. 967% revenue growth. That's huge. What's behind that?
It's really that volume kicking in. More production capacity coming online seems like strong demand for their current EVs, like the Mustang Mach-E and the F-150 Lightning. It's clear they're getting serious momentum in the EV space, at least on the sales front.
That's fantastic growth. But the big question with EVs is always profitability, right? Is this growth helping the bottom line for Model E?
Not yet turning a profit, no. Model E still posted an EBIT loss. $849 million for the quarter.
Still losing almost $850 million on EVs.
Yes, but, and this is important, that loss is actually better than last year. Last year in Q1, they lost $1.327 billion.
Ah, okay. So the loss narrowed even while sales exploded.
Exactly. They're losing less money per vehicle, essentially, even with much higher volumes. Ford specifically said they're focused on improving gross margins, being disciplined with investments in batteries and next-gen EVs.
I see. Progress on the loss front, but still a way to go.
Definitely. They also mentioned a 15% year-over-year jump in U.S. retail EV sales, crediting their Ford Power Promise campaign. But yeah, that path to profitability for EVs, it's still the multi-billion-dollar question, isn't it? Investors are watching those margins very closely.
For sure. Okay, so Model E growing fast, losses improving, but still large. What about Ford Pro? The commercial side, usually a real strength for them. How do they fare?
Ford Pro also saw a dip in Q1. Wholesale units down 14% to 352,000.
Okay, also hit by shutdowns then.
Seems like it. Revenue was down 16% to $15.2 billion, and EBIT followed, dropping to $1.3 billion. That sounds okay, but it was $3.2 billion last year.
Down from $3 billion to $1.3 billion. That's another significant drop. Primarily volume again?
Yeah, primarily the lower volume from the planned downtime. They also mentioned some less favorable pricing on fleet deals played a role.
So those shutdowns really echoed across Blue and Pro. Were there any positives for the commercial division despite the lower profit?
Yes, definitely. The software and services side is growing. Paid subscriptions reached 675,000.
Subscriptions. Like for telematics and fleet management stuff.
Exactly. And that's up 4% just from the previous quarter. That's important because it's a higher margin, recurring revenue stream that helps the bottom line more reliably over time.
Right, sticky revenue.
Exactly. And Jim Farley also stressed that Ford Pro had a strong start to the year overall, gaining market share in key commercial segments in the U.S. and Europe. So despite the temporary dip, the underlying business there seems pretty solid and competitive.
Okay, that makes sense. Now let's shift to some of those external factors you mentioned. Tariffs. That sounds like a big cloud hanging over things. What are they actually expecting?
They put a number on it. Ford is estimating a net negative impact of about $1.5 billion to their adjusted EBIT for the full year 2025 just from tariffs.
$1.5 billion.
Yeah.
Just from tariffs.
Yeah. It's a really significant number, really shows how much these trade policies could potentially cost them.
That's a huge potential hit. So how is that uncertainty affecting their forecast for the rest of the year?
Well, it led to a pretty big decision. Because there's so much uncertainty, could new tariffs come in? Could existing ones change? Will other countries retaliate? How does it affect supply chains? Plus, other policy questions around tax and emissions.
Yeah, lots of moving parts.
Exactly. So Ford decided to suspend their full-year financial guidance.
Suspend guidance completely.
Yeah. Pulled their targets for adjusted EBIT and adjusted free cash flow for the full year. They basically said, look, these external risks are just too big and unpredictable right now for us to give a reliable forecast.
Wow. That sends a strong message about the level of uncertainty they're facing. What does that mean for investors?
It definitely injects some caution, right? Acknowledges these major headwinds. It's transparent, but it does create short-term uncertainty. They did say, however, that they plan to give an update during the Q2 earnings call.
Okay, so we wait until the Q2 results for more clarity.
Seems so. Everyone will be listening very closely then.
Despite pulling guidance because of these external things, did Ford say anything about how the actual business, the underlying operations, are doing?
Yes, they did. Jim Farley really emphasized that the core underlying business is strong. And importantly, he said it was actually tracking within their old guidance range before factoring in that potential $1.5 billion tariff hit.
Ah, okay. So operationally, things were on track.
That's the message, suggests the core is solid. They also pointed out this was the third quarter in a row they saw year-over-year cost improvements, excluding tariffs. So that efficiency drive seems to be showing real results.
Cost improvements are key.
Absolutely. And they also kept hammering the point about quality. Significantly better quality is a top priority.
Good to hear they're making progress internally despite the external noise. What about shareholders? Any news on dividends?
Yep, they confirmed the regular Q1 dividend, $0.15 per share. And they also mentioned the supplemental dividend, another $1.15, which was announced earlier and paid out in March.
Okay, so still committed to returning cash to shareholders.
Seems so, even with the current uncertainties.
And looking forward, what's the big picture strategy? What did they emphasize?
They briefly mentioned the Ford Plus plan, their overall transformation strategy. Sherry House, the CFO, stressed the focus on efficiency and being really disciplined with where they spend their capital.
Makes sense in this environment.
Right. And they highlighted that strong balance sheet again, saying it gives them the flexibility to invest where they see profitable growth, but also navigate, whatever the industry throws at them.
Okay. The earnings call always has that Q&A with analysts afterwards. Did any key themes pop up there? What were analysts focused on?
Yeah, a few recurring things. One was about the timing of earnings through the year, what they call calendarization. Analysts basically expected Q1 to be weaker because of those shutdowns, with things picking up in the second half as production recovers and cost savings hopefully build. Q1 results pretty much matched that expectation.
So no big surprise on the Q1 weakness itself?
Not really. It was anticipated. Then, of course, a lot of talk about EV strategy.
Always. What was the tone there?
Ford sounded confident in their plan, focusing on making EVs more affordable, getting into high-volume segments, and really pushing the potential in commercial EVs. But they also acknowledge they're watching the market closely and will adapt. It's still evolving fast.
Right, and cost savings.
Yep, analysts asked about that too. Ford reiterated they're working on it, materials, warranty costs, design efficiencies. They had that earlier target of $1 billion net savings for 2025, and they confirmed progress is being made.
And tariffs must have come up in the Q&A too.
Oh yeah, big time. Ford repeated their concerns the potential long-term damage if tariffs stick around, especially if they aren't applied evenly across all imports.
A complex issue. Anything else major?
Just a mention of their powertrain strategy overall, reinforcing that they see a need for variety gas engines, hybrids, maybe even things like extended range EVs or EREVs to meet different customer needs and price points. It's not all in on just one thing yet.
Okay, that covers a lot of ground. So if you had to boil it all down, what are the absolute key takeaways from Ford's Q1?
I'd say, number one, revenue and adjusted profit were down, mostly because of those planned production changes. It was somewhat expected, but still significant drops. Number two, Model E, the EV side, showed really strong sales growth, and losses are narrowing, but they're still substantial. Ford Pro, the commercial side, took a profit hit from lower volume, but the underlying business and services look solid.
Got it. And the big one?
The big one is suspending the full-year guidance. That signals major uncertainty, primarily around tariffs, which they estimate could cost them $1.5 billion this year alone. The underlying business seems okay, cost efforts are working, but these external factors are a huge variable right now.
This has been a really helpful deep dive breaking down a complex quarter. For you listening, we hope this gave you a clear picture of Ford's results, how the different parts of their business are doing, and why things like tariffs are casting such a big shadow right now.
Yeah, and it really leaves you with a question to think about, doesn't it? Ford says the underlying business is strong, but they're facing this potential $1.5 billion hit from tariffs and pulled their forecasts. So how do they navigate that? What levers can they actually pull to protect profits and keep their big transformation plan on track when facing these huge external pressures? It really shows how intertwined company performance and global politics are in the auto world today.